The Bitcoin supercycle, a hypothesis that was discussed by many analysts during the last bull market, is taking on a different meaning today. So, is the leading cryptocurrency capable of entering a phase of prolonged growth? Let's get started. Hey there! Welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and an altcoin chosen by you. We come together and take a look at the charts from three different perspectives: technical, on-chain, and of course our amazing fire charts. You appreciate this because on our Polish language channel, we're just 1,000 subs. Well, maybe just a bit more, away from reaching 50,000. Meanwhile, on our English language channel, we've already surpassed our first 1,000 subscribers, and we hope to reach many, many more, and to do it very quickly. That might just happen with your help. So if you, my dear viewer, haven't subscribed to this channel yet, make sure to hit that subscribe button, leave a like, hit the notification bell, and also leave a comment. And remember, the content in these videos does not constitute investment advice. It is solely my subjective opinion about the crypto market. For investment advice, consult a licensed advisor or simply do your own research. And I'll be encouraging you to do that through a contest, which, as always, I'll talk about at the end of this video. So if you're ready, grab a coffee, and let's get started with the analysis. 3.5%. That's exactly how much below its previous all-time high Bitcoin is currently sitting. Its price has really soared to the skies, but in squawk, which we can clearly see in this not very nice, but it's the upward trend and it's unfolding right in front of us. It's worth noting how precisely Bitcoin is moving because we saw a breakout right here from around the $84,000 level. Consolidations, another breakout, consolidation, and another breakout. Attention. Consolidations, not deep corrections, just consolidations. Of course, consolidation is also a form of correction. It's worth keeping that in mind, but it still indicates that demand is rising, size, and very strong, especially in this area here. We expected that Bitcoin, at critical moments, could drop to our gray box, i.e. the zone between $91,000 and $87,300. However, the wicks that were pulled up here showed us that demand is appearing much, much higher. And this zone, which is the obvious support zone, doesn't necessarily have to be reached at all. So strong hands were already buying back much higher, knowing, or rather believing, that they would be able to push the price upward. And that's exactly what's happening. We have a third consolidation within a relatively short period of time, which in this case is located just below the previous all-time high, ATH. This is very important, because such consolidations very often result in a continuation of the upward movement. But so that it doesn't sound too optimistic, and it's also worth noting that if we don't have any significant corrections and the movement is quite dynamic and upward, then profit taking is bound to occur. The first support level that I see here is the one at $100,000. So here we have a subtle horizontal line, drawn. And in fact, we can also see that there have already been some reactions at this level. The first reactions appeared on Monday when there were declines and rebounds from areas slightly above $100,000. Another area that I would see here as quite a good spot for buying is the $98,000 area, meaning these peaks that we had here. The next one is the zone of consolidation that we've observed in recent weeks. However, when it comes to a drop down to this gray box, in the near future, at least in the weekly perspective, I don't see much chance of that happening. Price action isn't the only thing currently looking favorable on the Bitcoin chart. Besides that, it's worth paying attention to the indicators. The first one I'll mention is the TD sequential, which is our indicator that tells us whether a trend reversal might occur or not. These are the 9th consecutive bearish or bullish candles, which very often react quite accurately. And in this case, we can see that even though we had a 9th bullish candle of the TD sequential indicator along the way, a red one, which signals, hey, a trend reversal might happen soon, we experienced a period of consolidation here. Yeah, we mentioned that this could end with consolidation and then another breakout. Currently, we are not seeing a 9th candle. Moreover, the current price action indicates that the indicator, regardless of how many bullish candles it currently has, is actually resetting and correcting the present price movement. It's also worth looking at the RSI, and the RSI, as we expected, has climbed into the so-called overbought zone, in quotation marks, of course, which tells us that the bulls have taken complete control of the market and are truly steering it. I also mentioned that in these zones, it's worth looking for divergences. the so-called bearish RSI divergences, which indicate that a trend reversal may actually occur. Currently, we have only one peak formed here, so there's really nothing to talk about yet. Another peak may appear as early as next week, but so it also depends on which upwards direction it develops. If it is lower, then what would result from the price action candles, then we could say that there may indeed be some exhaustion of the movement and a trend reversal could occur. Nevertheless, at this moment, and as we are recording this material, nothing like that is happening. It's also worth paying attention to other indicators. In this case, I'll mention the MACD and the stochastic RSI. The MACD, through its histogram, is giving us a signal of a certain divergence, but is the only indicator doing so, and it's actually quite a lagging indicator, which is why I'm not giving it much consideration here. In addition, the stochastic RSI is resetting very nicely. It shot upwards and is now entering a correction phase, while at the same time the price remains very high. So the indicators are telling us that the current move we're seeing in Bitcoin is actually a healthy one. The Bitcoin fire charts are also looking very interesting. We can see that a solid resistance is emerging, and this resistance is located around $110,000. This is very justified because in this zone, when Bitcoin reaches such an area, all the Bitcoin holders will be in profit. So the selling pressure will be that much stronger. It's worth noting that the volume here amounts to $53 million in Bitcoin waiting to be dumped onto the market. And indeed, it may seem to us that $53 million in Bitcoin is not much, but it jingxi. But let's remember that what we see here on this chart and does not reflect the actual complete market data, okay? Because these change over time, as do certain proportions of market behavior. And we can see that certainly in this area, around $110,000. The sales values will be increasing, if only because not all factors are included in this chart. For example, we don't see who is selling at market price and with what volumes. And there are actually a lot of such sellers. Apart from that, below the current price, that is below our blue line, we don't see particularly many support areas, although some are slowly being built up. I'll turn off the information next to my cursor, and let's take a look at this band that's here, which has been present for 2 days now. We can see that it is located around $101,000, so a bit higher than the support I just marked at the 100,000 level. And we can see that this reflects a certain behavior we've seen in the past, where strong hands want to buy a bit higher than what would typically be considered a buying opportunity. In addition, I pointed out that it's worth keeping an eye on the $98,000 level. Let's also check what's happening here at the 98 level. We can see that a certain area is being built up here, but it's still quite small. So at the moment, no one is really seeing a buying opportunity here. Well, no one, maybe that's an exaggeration. There are just significantly fewer players here. And as for resistance levels, currently Bitcoin is trading in a resistance zone located around $104,000, slightly above that. The next stronger resistance is still around $106,000. It's worth paying attention to the CVD because it looks extremely interesting. While we see almost all market participants interested in buying, because our curves are constantly rising, and among them are the whales, that is our brown jagged line, which rises here all the way to the very top. At the same time, we observe that retail investors are not buying. Retail investors most likely missed out, they were late, and we can see this through the orange line. This is what retailers are telling us about. These are the wallets that hold between $100 and $1,000 in their balance, and they are currently in a downward trend. So retail investors are rather out of the market, while bigger players are still buying. So is the Bitcoin supercycle, this mystical Bitcoin supercycle, or is it actually possible? There was a lot of talk about it during the last bull run. Currently, this topic is being brought up a bit less often. And I'm bringing it up because I feel like there might be something to it. Why? We'll look at the chart from two perspectives. The first is a Bach structural perspective, and the second is the perspective of a certain indicator. The structural perspective means that we see on the weekly Bitcoin chart that in 2021 it reached a peak, which was later surpassed in 2024, setting a new all-time high, and then at the beginning of this year we saw another all-time high, which is over $108,000. What's important is that the chart structure shows that from this level, from the previous all-time high, we had a drop, and are currently seeing a very strong rebound. It's crucial to note the level to which this drop occurred, and the drop reached the areas of the previous all-time high. So we are only now testing the key levels from the previous bull market. This is something that should have appeared on the Bitcoin chart, considering that we have been in a bull market for quite some time now. So the chart seems to be lagging, which could mean that ahead of us, in fact, ahead of Bitcoin, there are still some really big upward moves to come. But to confirm this, I'll look at this chart from yet another perspective, and that is the perspective of the P-cycle top indicator. The P-cycle top indicator is an indicator that is divided into two moving averages. The red one is the 111-day moving average, and the green one is a double multiplication of the 350-day moving average. Well, every time this indicator, these moving averages, it crossed, when the red line crossed the green one from below, it marked the peak of Bitcoin's price with really great precision. I've talked a lot about this indicator in the past minute, so I encourage you to check out my previous materials, and if not, I will definitely come back to it and go into more detail. Nevertheless, it's worth pointing out one interesting thing. First of all, the moving averages that we see here, but those are extremely far apart from each other. This is because the faster moving average reacts very often to consolidations and possible corrections and pulls back, while the slower moving average, given the current price action, is not able to stop or slow down its movement at all. We may have had a situation here where there was indeed a slight slowdown, but currently, once again, the 350-day, double 350-day moving average is in an upward phase. Additionally, it is worth noting the period we are currently in. It is May 2025, whereas in the previous bull market, already in April 2021, in that case, we had a situation where the indicator crossed. What's more, in 2011, when such crossovers occurred twice, both in April and in November, marking two peaks. At the moment, we absolutely cannot talk about a peak. Moreover, these moving averages are extremely far apart from each other, which may indicate that a supercycle could indeed be occurring. However, it's worth remembering that a single indicator is not enough to determine which phase of the cycle Bitcoin is currently in. That's why in our materials, on the channel, and in our crypto market analysis, we occasionally present a comprehensive set of critical deviation indicators. If you're interested in this and want to see how Bitcoin behaves on other indicators, especially long-term indicators, I encourage you to subscribe and make sure to join me here in the upcoming videos over the next few weeks, because we'll be preparing such a material for you very soon. By the way, today there will also be a segment about this in the long analysis, so I encourage you to stay with me until the end. Let's move on to Ethereum, where an incredible amount has happened. 7 days and almost 50% growth, an amazing result. Did we expect an increase? Yes. Did we expect such a high increase? Absolutely not. Ethereum really bounced off our 50-day moving average and soared, completely breaking through all our resistance levels that we talked about in the last video. It completely broke through the 100-day moving average and has now hit the 200-day moving average, which is our green line and gray box. Pay attention to this gray box, because historically it has been a strong resistance zone, and not just once, as well as a solid support. In my opinion, the price rally of Ethereum could end here, at least in the short term. This could be further confirmed by an additional divergence appearing on the RSI. We can see that the RSI here, in the area of caution, overbought territory, which is a very important zone, is showing a downward movement. Meanwhile, the candlesticks are showing an upward movement, and this is happening over a relatively short time frame, just a 4-day period. That's a bit too little to confirm it 100%. I prefer slightly broader time frames. Nevertheless, this is an important signal that Ethereum might actually lose some momentum here and undergo a correction. How far should this correction go? In my opinion, it might not be a deep correction at all. But after a 50% increase, now, let's not kid ourselves. Who wouldn't take profits? Especially if they've been holding on to them the whole time. And I see areas here for a correction, for declines, where the price of Ethereum could reach around $2,400. These are the wicks of these extended candles here. However, after that, the next areas would only be around 2,100. So that would be very, very deep. So as long as these areas are maintained and the wicks don't go a bit lower, I don't expect Ethereum to drop out to 2,100 If these areas are actually broken, then this will be a very logical support level, support for Ethereum to bounce once again and try to attack our gray box one more time. The fire charts for Ethereum won't tell us much today. We can see some price action where Ethereum is currently oscillating, but we don't see any key support or resistance levels. However, the CVD looks quite interesting. And even though Ethereum is currently just below a significant resistance zone, and there are signals suggesting that a correction or consolidation might occur here, we can still see that everyone is buying. This brown line down here, the one that's so distinct and angular, obviously represents the whales. They are steering the market and driving the price up. We can see that other market participants are also still active, constantly buying. The question is, when will the whales stop accumulating? And is this perhaps the moment right now during this analysis? In my opinion, this is absolutely justified. At least that's what the technical chart suggests. So a word of caution with Ethereum at the moment, I would be a bit careful. Now it's time for an altcoin. And today, that will be BNB or Binance Coin. And this analysis will be a bit different than usual. Let's first take a look at what's happening on the chart. And we can see a certain consolidation that has been ongoing for quite a long time. Our book, as it started back in March 2024, and has basically continued up to today. This consolidation oscillates around the 200-day moving average, repeatedly confirming it as support or even resistance. Not always perfectly, not always precisely. But now we can see that in addition to BNB having broken through many moving averages that were below the 200-day moving average, it is now testing the 200-day moving average from above as support. This happened exactly yesterday on Tuesday, when we saw that there was quite a significant demand here, because the wick on this candle is quite long. Moreover, this is entirely justified. Here, I would look for potential further corrections and possible buying opportunities. Besides, it's worth noting that the RSI has also reached the overbought zone. But in this case, it is not experiencing any bearish divergence. So it is behaving somewhat differently than Ethereum. It is behaving in a healthy manner, which could result in BNB breaking upwards from the current areas. It's also worth mentioning the broader perspective on BNB, because apart from the fact that we see this consolidation, which has been going on for an exceptionally long time, we can also note that this consolidation is taking place within a specific zone. Maybe I'll remove this information and even switch the interval to weekly so we can see a bit more clearly that this consolidation is happening in the zone that was the ATH zone of the previous cycle. So currently, in my opinion, BNB is performing quite well compared to how Bitcoin is behaving, because it's currently valued quite high. Not all altcoins are behaving in a similar way, but nevertheless, BNB is reacting exactly in line with how Bitcoin is moving. These aren't exact copies of breakouts. They're not perfectly identical breakouts, but they definitely do overlap. Nevertheless, why am I mentioning this? Well, because BNB primarily tells us about the condition of Binance, which is one of the largest cryptocurrency exchanges in the world. So if we want to invest in BNB, it's worth not relying solely on technical analysis here, but also focusing on fundamental analysis. In the case of BNB, fundamental analysis could include, for example, publicly available information about the exchange's trading volumes and how many users it has. If the kind of data I'm mentioning here is interesting to you, be sure to look it up online, because there's a ton of it available. This data mainly tells you whether the number of users on the exchange is increasing, whether trading volumes are constantly growing, or whether the exchange is losing interest in favor of another one. If that happens, these factors will definitely be reflected in the charts and will cause BNB not to break out too strongly. However, it's worth remembering that cryptocurrency projects can break out more strongly than Bitcoin. We experienced this during the last bull run, for example, through the lens of the stock market listings of cryptocurrency mining companies, which at one point recorded a much higher return on investment than Bitcoin did. That's why it's essential to keep track of fundamental data, which in the case of Binance, is really easy to access. And then there's BNB on fire charts. Here we can see a certain resistance zone appearing around $700. $700 for BNB is basically the peak of recent valuations, the latest breakout. We're still looking at the weekly interval here. Switch to the daily chart. And we can see that basically on Monday, the price reached this area just slightly below it. And currently on fire charts, we can see that quite significant resistances are appearing right here. And these resistances currently carry a volume of just under 10 $1 million worth of BNB waiting to be dumped onto the market once this value is reached. Earlier, we can also see volumes at $680. These volumes are already half as much, or actually a bit more than half as much, since they amount to $4.4 million worth of BNB waiting to push the price down. It's worth noting that we don't see any significant demand volumes. There are some slight lines appearing here, basically in the last few hours, but they are still not equivalent to what we see above. It's also worth noting what's happening on the CVD, and an important thing on the CVD is that the whales, our brown line, are currently not participating. They're not taking part in BNB trading. On the other hand, the most active wallets are once again the retail traders, which is our orange line. These wallets, which have the smallest financial resources, are currently buying BNB. Fortunately, it doesn't look bad, because they are being supported by the second largest wallets, the purple ones, which have between $100,000 and $1 million in their balance. They are buying BNB during the dips or at the current price. If you're a beginner and you still don't know the difference between technical analysis and fundamental analysis, don't worry. Remember, we have Kanga University, and at Kanga University, there are also lessons on market analysis. One of the lessons is pinned right in that in the description below this video, and it explains exactly what the differences are between technical analysis and fundamental analysis. I encourage you to check it out. And if you'd like me to analyze your altcoin, remember, it's a very simple thing. All you need to do is register on Kanga. The registration link can also be found in the description of this video. Browse through the cryptocurrencies we have and let me know in the comments which one interests you the most. Just remember the 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be KNG. And third, it can't be any meme coin. So you know what to do. I'm counting on your comment. And on an interesting analysis next week. ETFs, and this time not just Bitcoin, but also Ethereum, because there's really a lot happening in the Ethereum space. But let's start with the king of crypto, that is with Bitcoin. As we can see, the interest of buyers and ETFs remains high, although it is weakening. This is a kind of divergence when we see that the indicator tells us something different. The buying power is much lower. These are purchase volumes in this case. Yet the price is breaking upwards. Nevertheless, Bitcoin is still on fire, reaching really high values, and more wallets are in profit. So here a correction, even among ETFs, is justified. And we can see that from time to time. These small red bars appear, which are currently growing, increasing somewhat in value, indicating that ETFs are partially selling off. Nevertheless, the buying power is stronger. But what does it look like in the case of Ethereum? Well, with Ethereum, we can see that it is absolutely not driven by ETFs, because the interest from ETFs is relatively weak. The largest volume bar in recent weeks was seen on April 25th, and since then, well, quite a bit of time has passed, already over 2 weeks. Now, we haven't seen much interest, and yet Ethereum's price is rising. It's time for confluence analysis, and here I've prepared 4 indicators for you. 4 indicators that very often tell us about critical deviations in the case of Bitcoin, both those critical during a bear market and those critical during a bull market, meaning the best periods for buying and selling. Well, we're bringing them up because Bitcoin is currently in a growth phase, and it's a growth phase that's aiming to reach a new all-time high, or at least that's how it might seem. So it's worth taking a look at these indicators. The first one is the 60-day cumulative increase, which is my FOMO indicator. And just a note, I won't be explaining these indicators in detail here because this material would go on forever and I'd simply bore you. If you're interested in these indicators, I encourage you to register on the Looknote platform and simply read the indicator descriptions to learn exactly what they are. In any case, briefly, the 60-day cumulative growth, and here we have this pink panel. This panel tells us about the market being kind of overvalued during a bull run. Every time Bitcoin reached this area, peaks were achieved. Importantly, at the moment, this indicator is far from that zone. Nevertheless, it is already well on its way to reaching the area of local peaks, the local peaks that we observed right here. Let's see how beautifully they all align. In my opinion, there will definitely be a correction here once this indicator reaches that area. That's why you should definitely subscribe if you want to stay up to date with this kind of content, because I will certainly be bringing up such topics here. The next indicator, which behaves in a very similar way and also tells us about critical deviations, is the MVRV Z-Score, which also still has a long way to go before it reaches the area of total market overvaluation. But just like the 60-day cumulative growth, it is also moving quite dynamically into an area that has so far been the region of local peaks. I'll just add that here we had a zone which was the area of the all-time high ATH reached in the last season. I mean, in the last bull market. So it seems to me, and I'm actually fairly certain, that if this indicator reaches this area again, we could see a significant correction. The Ahr999x Index, which is basically an indicator created by the Looknote platform. Let me remind you once again, the description of this indicator can be found at the bottom. I won't go over it here because it would take a very long time and is quite complex to explain in detail. Nevertheless, it behaves very similarly to the other critical deviation indicators. The only difference here is that the zones are somewhat flipped. Notice that this pink zone, which represents the normal maximum deviation, is located at the bottom. The green zone, meaning good buying opportunities, is at the top. And the indicator is also moving toward this pink zone, but it is still very far from it. Therefore, we can say that the cycle's all-time high, ATH, is still far ahead of us. Nevertheless, it's worth noting that local peaks appear here, and Bitcoin has often bounced off these local peaks. Here, the path still seems a bit longer than it was in the case of the 60-day cumulative growth and the MVRV. Nevertheless, we can still see that the price action is pushing this indicator into this zone, which means that a deeper correction may occur soon. And then there's NUPL, or net unrealized profit and loss. In my opinion, this is the best indicator, as it very often tells us quite precisely when the market is completely overvalued and when it's literally time to get out. In previous bull markets, we used to see these blue areas here. These blue areas indicated to us that this was exactly the moment. Currently, we already know that sometimes Bitcoin can't quite reach them, but it does hit price levels that cause the indicator to reach a value of around 75. In this case, for example, we had 74 around the last bull market, for instance, when such a value was reached in April. Currently, the NUPL indicator is at around, let's check exactly, 50, 0.56. So it's really still relatively far from the peaks. There's still a lot of room here for it to rise much higher. It's time for a contest. First, of course, the rules: present your own analysis of one of the cryptocurrencies I mentioned in today's video. So it can be Bitcoin, Ethereum, DOS, or BNB. Share your own perspective, whether it's technical, on-chain, sentiment, fundamentals, whatever you like. And remember, you don't have to agree with me. The author of the most interesting comment, in my opinion, will win 20 KNG from me. And the winner for the previous episode, Ahr999x Makoch, who analyzed Ethereum. Congratulations, a really great comment. Please contact support to claim your prize. That's all for today. If you enjoyed this and you're not yet subscribed to this channel, be sure to hit subscribe and join me here next week. Also, check out the Kanga Global channel, where using AI technology, we translate this exact material in a segment called Kanga Insights into English. It really turned out great. The last episode was uploaded with a 24-hour delay, but it did go up. We're still learning how to do this, but I hope we'll get much faster. Be sure to check out how it turned out and definitely see what comes out of this video. And please rate this episode on a scale from 1 to however high you want this time. Where 1 means it's weak, bland, I don't want to see you here anymore. And as high as you want means, well, we'll see each other next week. So see you then. Hi.